Have you ever wondered how small, seemingly insignificant amounts of money can grow into something substantial? In 2026, building wealth isn't about waiting for a windfall. It's about using smart, efficient strategies that leverage technology and compounding. By using modern financial tools and micro-leverage, you can turn small savings into a growing wealth machine. Today, we'll explore 5 unique ways to build financial security with minimal effort. Let's dive in. 1. The microequity aggregator. In 2026, the barriers to investing have vanished. You no longer need thousands of dollars to start building a portfolio. Thanks to fractional share platforms, you can invest as little as $5 into high-growth assets like AI and robotics ETFs. This is the microequity strategy. By investing small amounts daily, you capture market fluctuations that traditional investors miss. Instead of waiting for a $1,000 lump sum, you invest as soon as you save. This method lets you take advantage of intra-month dips, effectively increasing your total share count over time. Buying on these dips significantly boosts long-term returns. This habit creates a consistent investment snowball, allowing small contributions to grow into significant wealth without needing a massive initial payday. 2. High-yield tax loss harvesting for beginners. Even with a small account, you can use tax loss harvesting, selling underperforming investments to offset gains and reduce your tax liability. In 2026, robo-advisors have automated this process for everyone, not just the wealthy. Advanced algorithms scan your portfolio daily. When a position loses value, the system automatically sells it to create a tax deduction and reinvest the proceeds into a similar asset. This hidden return can add an extra 1 to 2% to your annual performance. Compounded over 20 years, this optimization has a massive impact. You don't need to be an expert. Automation ensures your portfolio is constantly working at peak tax efficiency in the background. By capturing these losses in real time, you effectively lower your tax drag, allowing more of your capital to remain invested and grow. Traditionally, this was a manual year-end headache reserved for high-net-worth individuals, but today's technology democratizes the strategy. This continuous optimization acts like a silent tailwind for your wealth, shielding your gains from unnecessary taxation without requiring you to track the markets yourself. Over a long-term horizon, the money saved on taxes becomes a powerful source of reinvested capital, turning what would have been a government payment into a compounding engine for your future. 3. The ASAP as soon as pay automation. Consistency is the hardest part of saving. While many know the pay yourself first rule, the ASAP as soon as paid strategy makes it a digital reality. Set your banking app to automatically sweep any balance over a specific threshold, like $500, into your brokerage account every Friday at midnight. This forces you to live on less by making savings invisible. You adjust to a lower spending threshold without feeling deprived, creating an artificial poverty effect that builds wealth rapidly. By automating the sweep the moment you are paid, wealth building becomes your default setting. You'll be surprised how quickly these effortless transfers accumulate into a substantial financial cushion. 4. Invest in digital real estate fractions. In 2026, real estate isn't limited to physical buildings. Digital real estate allows small investors to buy fractional shares of rental properties or data centers through blockchain-based REITs. You can now own pieces of high-value assets with as little as $100. This strategy allows you to earn rental income and benefit from property appreciation immediately, bypassing the years spent saving for a traditional down payment. It's an excellent way to enter hard assets early. These platforms also allow for instant diversification across various property types and locations. Over time, your small fractional holdings provide both passive income and long-term appreciation, opening doors to an industry that was once gate-kept by high capital requirements. 5. Leverage learn-to-earn rewards. What if your education paid you? In 2026, many financial platforms offer learn-to-earn programs. By completing short modules on financial literacy or emerging technology, platforms reward your time with small amounts of stock or crypto. Instead of scrolling social media, you can turn 10 minutes a week into free initial investments. These rewards add up, especially when moved into a compounded portfolio. By turning knowledge into assets, you gain 2 things: the skill to manage your money and the capital to grow it. Over the years, these educational incentives can become the cornerstone of a significant wealth-building strategy, turning your intellectual growth into a literal financial asset. There you have it, 5 smart ways to turn small savings into big wealth in 2026. Whether you are using fractional shares, automated sweeps, or digital real estate, the key is consistency and leveraging the right tools. Making your money work harder doesn't require a fortune. It just requires a start. If you found these tips helpful, don't forget to like, share, and subscribe for more insights on building wealth. Drop a comment below and let me know which strategy you'll implement first. Thanks for watching, and I'll see you in the next video.